Palantir has become one of the most widely discussed and closely followed companies in the technology and artificial intelligence industry because of the incredible performance of its stock in recent years. Investors who recognized the company's potential early on have seen tremendous returns that few companies in the technology space have ever achieved. In the year 2025 alone, Palantir's stock has increased by roughly 130%. If we extend the timeline back to the year 2023, when the global artificial intelligence boom began, Palantir's total return has grown by approximately 2,600%. These are the kinds of numbers that investors dream about, yet it is also a reminder that the past cannot be revisited. Therefore, what truly matters now is whether the company can continue to expand at a similar pace in the future, or whether it has already reached a point where its valuation leaves little room for further gains. When evaluating Palantir today, investors are divided into two camps. One group believes the company's growth story is still in its early stages and that artificial intelligence will push the stock to new heights. The other group argues that Palantir's success has already been fully priced into its valuation, making it risky to buy at current levels. Deciding which argument carries more weight depends on how an investor views the balance between growth potential and valuation risk. To understand why so many investors have been drawn to Palantir, it helps to look at what the company actually does. Palantir specializes in data analytics software powered by artificial intelligence. Its technology is designed to help organizations collect, analyze, and interpret vast amounts of data so that decision makers can identify patterns, detect risks, and make informed choices in real time. The company's software has been used for a variety of purposes, including national security, disaster response, financial analysis, and supply chain management. Initially, Palantir focused almost exclusively on government contracts. The United States government was one of its earliest and largest clients, using Palantir's platforms to analyze complex datasets related to defense, intelligence, and counterterrorism. This government focus helped establish Palantir's reputation for reliability and security, as its software had to meet some of the highest standards in the world. Over time, Palantir realized that its tools could also bring enormous value to private sector companies, so it expanded into the commercial market. This decision created a second major growth engine for the business and diversified its revenue base. This dual customer model, with both government and commercial clients, has proven to be one of Palantir's biggest strengths. It gives the company multiple sources of revenue growth and helps stabilize the business if one segment slows down. In the second quarter of this year, Palantir's government revenue increased by 49% year over year, reaching $553 million. At the same time, its commercial revenue surged by 47% to $451 million. These are outstanding growth figures, especially for a company that already operates on a large scale. They show that demand for Palantir's artificial intelligence solutions continues to grow rapidly across both public and private sectors. Much of this momentum is being driven by the growing adoption of artificial intelligence in the United States. American companies and government agencies have been among the earliest adopters of artificial intelligence tools, and this trend is reflected in Palantir's financial results. During the same quarter, U.S. commercial revenue grew by 93%, while government revenue rose by 53%. These growth rates demonstrate that organizations are investing heavily in data and artificial intelligence capabilities to gain an advantage in efficiency, security, and innovation. Although the United States remains Palantir's largest and most important market, there are still opportunities abroad that could add another layer of growth in the years ahead. For example, many European countries have yet to embrace artificial intelligence technology on the same scale as the United States. If that changes in the near future, Palantir could experience another wave of expansion as European governments and corporations adopt its software. Even if international adoption takes time, Palantir still has enormous potential within its home market. The company currently serves only 485 commercial clients in the United States, which means there is still a vast pool of untapped businesses that could benefit from Palantir's tools. With the growing emphasis on artificial intelligence investments across nearly every industry, it seems likely that Palantir's US growth will continue for several more years. Palantir's ability to attract both government and commercial clients highlights how flexible and powerful its technology has become. The software is designed to adapt to a wide variety of use cases, from analyzing logistics data for the military to helping private companies optimize their operations. Because of this versatility, Palantir's products are becoming increasingly embedded in critical decision-making processes across industries. This level of integration creates a strong competitive moat because once clients begin relying on Palantir software, switching to another platform becomes difficult and costly. However, while the growth story is impressive, investors must also pay attention to valuation. Palantir's stock has surged so dramatically that it now trades at one of the highest price-to-sales and price-to-earnings ratios in the entire technology sector. Specifically, the stock is valued at roughly 130 times sales and at 269 times expected future earnings. To put that in perspective, most software companies typically trade between 10 and 20 times sales. Even some of the best-performing software companies in the world, which have strong profit margins and rapid revenue growth, rarely exceed 30 times sales. Palantir's valuation therefore represents a level of optimism that very few companies can justify over the long term. When investors pay such a high price for a stock, they are essentially betting that the company will continue to grow at an extraordinary pace for many years to come. If that growth slows down even slightly, the stock could experience significant declines. To illustrate this point, imagine that Palantir manages to grow its revenue by 50% per year for the next 5 years, while achieving a profit margin of 35% and keeping its share count stable. Under those conditions, Palantir would reach approximately $15.4 billion in revenue and $5.4 billion in profits. That would be a massive improvement compared to its current $3.44 billion in annual revenue. However, even after achieving those impressive results, the company's valuation would still equal 27 times sales and 76 times its earnings in the year 2030. This analysis reveals that Palantir's current stock price already reflects several years of future growth. In simpler terms, investors who buy today are paying for profits that the company has not yet earned. Many other technology companies, including some with strong artificial intelligence capabilities, are trading at much lower valuations, which makes them more attractive from a risk-reward standpoint. Because of this, some investors believe that Palantir's stock may not deliver the same kind of outsized returns going forward. The company itself remains fundamentally strong, with excellent technology and a growing customer base, but the market's enthusiasm has pushed the price so high that the odds of significant further gains have diminished. Even if Palantir continues to grow steadily, it may take several years for the company's earnings to catch up to its current valuation. On one hand, the company has built an exceptional business that is benefiting from the ongoing artificial intelligence revolution. Its technology is powerful, its client relationships are expanding, and its growth remains robust. On the other hand, the stock's valuation has reached levels that make it extremely expensive compared to nearly all of its peers. For investors who prioritize value and are concerned about paying too much for future growth, Palantir may not be the best option at this time. For those who are willing to take on more risk in exchange for potential long-term gains, it could still be a compelling play. Palantir is an outstanding company with groundbreaking products and a clear vision for the future of artificial intelligence. However, the stock's current price leaves very little room for error. It might be wiser for investors to wait for a more reasonable entry point or to explore other companies in the artificial intelligence space that offer a better balance between growth potential and valuation. Essentially, Palantir has become one of the most impressive artificial intelligence companies in recent years, with its stock rising about 130% in 2025 and over 2,600% since 2023. The company's artificial intelligence-driven data software serves both government and commercial clients, creating strong and balanced growth. In the second quarter, government revenue grew 49% year over year to $553 million, while commercial revenue rose 47% to $451 million. United States growth has been particularly strong, with commercial sales up 93% and government revenue increasing 53%, and there is still untapped potential in Europe and other regions. However, the stock's valuation is now extremely high, trading around 130 times sales and 269 times expected earnings, far above the average software company. Even if Palantir continues to grow at a rapid pace, much of its future success already appears priced into the stock. While Palantir is an excellent company with innovative products and strong demand, investors may want to be cautious since it might take several years for its earnings to catch up to its current valuation. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.